the only two trading indicators that you need in the Forex market for trend trading. This is video 2 of 2. So last week we deeply talked into the topic of FOMO, the fear of missing out the long movements. We know now how to solve this problem. Of course, we need to analyze the movements in the market first. We have this beautiful 2 waves of this starting trending movement. We have this key level of support and resistance and the first indicator, the Fibonacci retracement, that tells us where the market is probably ending its pullback before continuing into the trending direction. If you have questions so far, jump back to my last week's video where I go into detail for those 3 elements. So let's find out now what trading indicator number 2 is that we need for final confirmation before we enter the market. Many traders contact me having trouble telling the difference between movement and correction, like we have here, movement and then correction, before we enter the market to catch the next movement and the further ones into this long direction, into the long trend. But how to tell clearly which is really a movement or a correction? Like we see here, we had this movement before into the downwards direction. So the correction was upwards, then the movement downwards. Here, more of a sideways range before there was the last movement. And then the reversal here. And this was first, of course, a correction, but was later on pointing out that this is the first movement. So to get a clearer picture, please guys, go ahead and switch your candles from the normal ones to the Heikin Ashi ones down here and apply them to the chart. So Heikin Ashi candles, which means average bar in Japanese, is a useful technique to spot market trends and to predict future prices. So it makes the chart more readable for us and trends easier to analyze, so we know more exactly which are the trending movements and which are the corrections where a change might be occurring. So let's see how to interpret these candles. So the green candles with the no wick on the bottom and the wick on the top, these are indicating a strong upwards movement. Other way around, of course, the red candles with the wick on the bottom but no above are strong downwards candles here in the pullback. But there are also candles with wicks on both sides, which are showing us indecision in the market, which could also announce a trend in change, or of course here that the pullback is ending soon. For example, here we have these green candles with the wicks on the top. Here we see some candles with wicks in both directions, and then the pullback is starting. And here a short switch, but then this big spike shows us that the market will probably not go through, and then the pullback is taking over again. And here indecision in the market for quite some time, but then the market continues up with wicks the top mostly. And here indecision again with on both sides, and the pullback is starting. We can scroll back a little to check this. And we see here a beautiful upwards movement, mostly only wicks on the top. Here again a candle with wicks in both directions before the short movement starts. And beautiful downwards movement, and here in the sideways range we often see candles with wicks in both directions, and we also see that green and red candles switch really often, so there is no clear direction. But whenever it is, we see a bunch of candles of the same color moving into the same direction. So this really helps us to tell what is going on the market, and it's important to take a look at this on the higher time frame, so you exactly know what is going on in the situation where you want to place a trade in. And we see here that the market had a while of indecision, but then the pullback continued further down. And after such a clear movement with only red candles, wicks mostly at the bottom, And then we have the first candle with wicks in both directions here. As soon as the candles turn green, this is our additional confirmation for our reversal that the market is ending its pullback and continuing in the long direction. So here the next candle turns green and has also wicks in both directions, so close attention here. This is the confirmation that we have been waiting for, our final confirmation for taking our trade into the long direction. So back here on the chart with the normal candles, we also have a bullish engulfing candlestick pattern right here, the green candle engulfing the red one. So this is the time where we jump back from the 4-hour time frame that we're on here. Jump back to the 50 minutes chart. Let me erase the drawings from earlier real quick. Zoomed in on M15, we see this beautiful downwards movement that we have seen within the pullback, and that the market reaches this level that we have analyzed with Fibonacci, with support and resistance, and also Heikin Ashi, all three confirming this to be a high potential setup to go long. So in M15 now we will enter the market into the trending direction, long catching the trend really at the low of the pullback, so we get the most of the further movement. Depending on your strategy now where you enter the market, since we have all these confirming factors, it is definitely a possibility to enter the market just down here where we have reached this key level without any further patterns or something like that. But as well, you can of course look for candlestick patterns like we have here, for example, these beautiful 3 white soldiers. You can also do breakout trading, for example, like the market is breaking through this last high here now. There are different options. You can look for a chart pattern, of course, as well, but just depends on your strategy, what you personally feel comfortable with, because it doesn't really help if you add a factor to your strategy that you are not able to find in the chart or that you don't feel comfortable with. So pick the one that works best for you and your strategy. In this case, we will enter the market right here. With the next candle, we go long, entering the market here, putting the stop loss below the last low. Always make sure to leave enough room. I never get tired of saying so, because I've seen many traders to put the stop loss just too close because they want to avoid too high risk. But what they really avoid is to make it possible for the trade to develop well. So in reality, they don't cut their losses, they cut their profits, because sometimes, of course, the market ticks a little lower and then continues long, usually, but not lower than the last low. So always make sure you leave enough room. For the target, I jump real quick to this 4-hour chart again, because of course, this is the target that the market should definitely reach. But of course, when the trend continues further along, the market at least should reach this level. But there's potential for even more. So this is another factor for your strategy. Decide yourself if you are working with targets or if you rather manage your trades yourself, just moving the stop loss whenever you need to. I prefer moving the stop loss as well. But of course, for managing the trade yourself, you need the time to look into the chart every once in a while to make sure that you move the stop loss on time, because otherwise that will, of course, ruin your profits if you don't do so. So our risk-reward ratio in this case is 7.5. So you see how powerful these combinations of indicators can be in order for you to catch the trends on the bottom of the reversal, to catch the most of the trending movement for a good chance, a good setup, a high quality setup, of course, a good risk-reward ratio, and what's even more important, a long-term working strategy that is repeatable. So last but not least, let's see how this trade works out. And we see this trade started well, then spent quite some time into a sideways range, but finally continued its way up into the trending direction and hitting our target. Here we're back on the 4-hour chart to get a better picture of this. Here we see this ongoing movement. The trend continued with its next wave, And of course, there's more potential in the market since we have only 3 waves yet. So there's more potential for a further continuation of the trend for even more profits. So in this video, you have learned how the Heikin Ashi candles can reduce the market noise to make it more clear for you where the movement is and where the correction. We have added them with the factors from the video before, a really powerful booster for your trend trading strategy in the Forex market. Now go ahead and try it yourself. Add those elements, add those indicators to your trading strategy and bring it to the next level. Leave me a comment below. How is your experience with these indicators? Do you like them? Are you gonna use them? I would really love to know. And if you have any more trouble with them, let me know in the comments. Then I will make a more detailed video on that topic. That's it with this video of these wonderful 2 indicators, the Heikin Ashi and the Fibonacci retracement. I hope you enjoyed it. If you did so, please don't forget to leave me a thumb up and to subscribe to my channel if you haven't done so. And then I will see you next week with the next video. And don't forget, if you want to join my trading community, you'll find below this video the link to my website. See you there. Bye bye.